What's going on, everyone? My name is D. Anthony with Evolution Traders. In this video, I want to give you guys the harsh truth and the cold hard reality of why you're never going to pass a prop firm evaluation, let alone take a payout. It has nothing to do with strategy. It has nothing to do with indicators. It has nothing to do with the actual markets itself. It has to do with the way you are setting up your trading plan. Now, when you go out, and I'm going to use a $50,000 evaluation as the example because that seems to be the level and size of account that is most popular with a lot of prop firm traders. Depending on the prop firm that you are trading with, you have between a $2,000 and $2,500 drawdown risk. Now, when it comes to the strategy and the edge that you are using as a trader, we can completely throw that out the window. Because if you have back tested your strategy enough and it is now become the edge that you're going to use in the market to take trades, you, my friend, should already know that it's going to have a high rate of probabilities to be successful and consistent over a series of trades, not a trade by trade basis. Now that that's out of the way, the reason why you are never going to get to the end of the rainbow and the pot of gold to see the little leprechaun is because your position sizing is too large for the drawdown allowed in that particular account. Now, you may be thinking to yourself, everyone talks about position sizing. I know this, but I don't want to spend a lot of time in evaluations. I want to go out there and I want to make $10,000. I want to go out there and pass an evaluation in one day because certain firms say that it's 1 day to pass or it's 2 days to pass as long as I'm falling in lines with the consistency rule, so forth and so forth. Let's get to making the money quickly. But a lot of you guys and a lot of traders, especially in the beginning phases, have not experienced the level and the amount of trades needed to be taken in order to be consistent, let alone execute their edge in a manner that is going to allow them to see success. So what I'm trying to tell you is that if you're trading a $50,000 account, your drawdown is between $2,000 and $2,500. The maximum that you should be risking per day, whether you want to risk it all in one trade or over a series of a couple trades, is your prerogative. But in one day should not exceed between $100 and $125. Now, if you're thinking to yourself, well, there's no possible way that I'm going to be able to trade one mini contract because this can move up or down 5-10 points in a blink of an eye, and it's going to stop me out and the move can still go in my favor. You just answered your own question. You can't trade one mini contract on a $50,000 account with no buffer. If you have no cushion in that account, you need to size down a little bit, allowing yourself to be able to take trades in a manner where you're going to be able to take losing trades and still be able to trade the next day. Now, what I like to use in a lot of things, and you're going to notice from the 20 SMA, from how I calculate my profits using the 20X rule, and I'll get to that in another video. But I like to use 20 because the brain kind of registers 20 very, very clearly. 20 is a psychological number that, again, I know this because of personal back testing and history and talking with people, but 20 seems to get things going. It seems to get the engine revved up. And what I mean by that is that, again, I'm going to make a point after this comment, but if you cannot take 20 trades and lose them all and still have an account, you're sized too heavily. Now, the point that I want to make is that if your edge, strategy, reason for taking trades, execution, methods of madness, whatever you want to call it, is going to allow you to lose 20 trades in a row, you don't have an edge and something needs to be refined. Because I don't personally know a trader, even if they close their eyes, click buy or sell, who's going to lose 20 times in a row. Okay, so that's where this fits into the parentheses. That's where there's the asterisk. However, we always want to plan for doomsday. We always want to plan for the worst possible thing that can happen, and that's losing 20 days, 20 trades in a row. Like I said, as long as your trading strategy is profitable, regardless if it hits at 20% of the time or it hits at 60% of the time. Now, again, How can someone be profitable trading a strategy that only wins 20% of the time, 25% of the time? That's because they're risking 1 to make 4. They're risking 1 to make 3. Not all edges and strategies and people, traders, have the discipline to hold a trade in profit for 2R, 3R, 4R, 5R. Myself personally, I'm looking for that 1-to-1. That's kind of my sweet spot around that. And sometimes it's risking 2 to make 1, which again is going to result in me having a higher win rate, okay, at the end of the week, maybe 65, 75% of the time, sometimes 80% of the time. But again, my profits are going to be a lot smaller than someone who says, you know, hits at 30% of the time. Maybe they only win 3 trades, 4 trades out of 10, but they're losing 10 points to make 50. Big difference there. Now, again, it's based on your edge and your strategy. So that's something that you have to come to terms with and figure out. But what I want to really focus on here is that if you can get through a series of 20 trades, and I challenge you tomorrow, I challenge you whenever you're watching this video, I challenge you on Monday when the market is back open, take the next 20 trades and document. Take the next 20 setups that your strategy presents itself. Run your risk management profile using that scenario that I gave you, where if you lost 20 trades in a row, it's not going to blow your account. Now, again, I know that if you have a $2,000 drawdown and you're risking $100 and you did lose 20 trades in a row, it's going to hit that $2,000 max loss. That's fine. At that point in time, on that 20th trade, on the 20th day, whenever it seems to happen, for some of you guys, because you guys trade a million times a day, could happen in one day, then there's something where you need to fix. Because if you're losing 20 trades in a row, we've obviously got bigger problems as stated before. But your trading account should be set up in a manner to where after a series of 20 trades, you should be profitable based on your edge. And from there, it's all about running the numbers in the next series of 20 trades. And after that, the next series of 20 trades. And what that does is it allows you to slowly bring in these profits, keeping that edge profitable by a smidge, by a hair, and allowing you to fine tune everything without ever blowing your account. Now, again, slow and steady always wins the race in trading. Even though we're day traders and scalpers and we can make a tremendous amount of money in a very short period of time, you have to take the long-term investor's kind of mindset and approach to where we want these small gains to continue to compound and grow over time. We do not want to get rich in 30 days and be left with no money 12 months later. We want to still be able to do this 6 months from now, 12 months from now, 5 years from now, 15 years from now, 20 years from now, however long you choose to do this business, we want to still stay in business. So for most of you guys out there who are trading $50,000 prop firm evaluations and funded accounts, you should be risking no more until you have a cushion of at least, in my opinion, $2,000 to $4,000. You should be risking no more than a maximum of around $100 to $125, $150 max per day. Now, again, however that breaks down, whether you want to choose to risk $100 per trade, and if you do lose that one trade, you call it quits on the day, or you would choose to take 2 trades risking 50 and 50, or take 3 trades risking 30, 30, 30. However you want to break those numbers up is however you want to break those numbers up. But if you stick to that, you will be making, is assuming that your strategy hits at a 1-to-1 or somewhere around a 1-to-1, you're looking between that $75 and $100 winning day as well. And if you have a strategy that hits at a 2, 3, 4, even 5R, because I know some of you guys like to really hold these extended moves out there, then you're only going to need to see a few winning trades before you break into profitability. But the hardest thing in trading is to actually stick to the method and trust the method when you go through those series of paper cut losses where you get into a beautiful setup and it looks great and you have a losing trade. Now, the price action and the stock market and the futures market has no idea what your edge is. It has no idea when your winning and losing trades are going to be. It's up to you as a trader to have the emotional stamina to be able to sit through and ride those waves. And the only way that you can ride those waves is by sizing yourself correctly and having the proper draw daily loss limit or drawdown limit or the right position sizing. Many of you guys are out of focus, out of position size. You guys are playing 5 micro contracts on a 30-point stop loss. You guys are playing 2 mini contracts when you only have $2,500 worth of drawdown or $2,000 worth of drawdown. The trade goes against you 10 points, which is not a lot in the NASDAQ 100, and you lose an immediate $400, which is wiping away essentially 4 trading days in that $2,500 drawdown risk. So I hope that makes sense to a lot of you guys out there. And that's the reason why you're never really finding too much success. You go out there and you have that one really good day where you make $500 or you make $1,000 and you make $2,000 and you think that that's obtainable. And the sad reality is that when you do take that losing trade and lose a $500 trade or hit your daily max loss of $1,000, all it does is kind of compound into the next day and you oversize yourself again. And sure as hell, here we are 24, 36, 48 hours later, and you've lost another evaluation and constantly pumping new money into these prop firms to get more and more and more and more evaluations going. I'm a big advocate of copy trading, maybe 5, even 10 accounts, and looking for those small gains. If you have 10 accounts and you're making an average of $30 to $50 a day, not only are you making $30 on your singular account, times 10 is a $300 day. That's really, really good money and on pace for around $5,000 a month. If you're somewhere hitting between $100 and $200 a day, you're essentially times 10 accounts, if you have them, are essentially making $1,000 day, which could be on pace for a $20,000 month. Let the numbers really start to sink in and focus more on the process of protecting your capital and trusting your strategy and trusting your edge the way that it was designed to be trusted and taken. You are not smarter than your strategy. You are not smarter than the math. You are not smarter than the markets. You are not smarter than the price, and you have no idea when your winning and losing trades are going to come. The only thing that we know is that when we get that indicator, that green light to take that short position or take that long position based on our strategy, we must take that trade for better or for worse. Don't worry about the outcome. Worry about the end result after a series and block of trades. I hope that makes sense. Guys, I'm shooting for 6,000 subscribers. Make sure to hit that subscribe button. If you would like to trade with me and the room, that link is down in the description box below. I'll see all of you guys on the next video, and I hope you guys enjoy the video.